Hey guys, what is going on? Hope trading is going well for you. It's Forex James again with another video for you. And this video's topic is what it means to have an edge in the market. So we've all heard about the word edge, having an edge in trading, trading with an edge or some sort. And let's get deeper and discuss what it really means to have an edge in the market. Okay? So a while back I posted a video on where price is likely to break out. Okay, and someone commented this. It's not necessarily a bad comment. I appreciate him commenting. Okay, it's his opinion, it's his right, but I was also stating my opinion. He said, if you really are able to know in advance where price will break out, you'll be a billionaire. Don't get fooled. In reality, there's no known method to do this. This video is nonsense. If you don't believe me, then just go and try and you'll see. I agree with him to a certain extent that it's never going to be 100%. Trading is based on probability, on the likelihood that something is more likely to happen than not. Okay, it's never going to be 100%. But as long as you can keep that more than 50%, okay, 50-50 means it's really random, right? You don't know what price will do, if it's going to go up or down. But if you can shift it slightly to over 50%, that means you have an edge. And that's all there is to it, guys. Okay? So I've chosen this picture of a roulette table for a reason because I used to play it myself just for fun. I love that it's a simple game. Okay, you either bet on the numbers, on even or odd, black or red, and so on and so forth. Okay, but what I used to do is just bet on either even or odd because I know that if I get lucky, I might be able to make some money. Okay, not in the long run though. Okay, and here's why: the house has that slight edge against the players. Okay, let's take a look at this even, odd, red, and black, low or high. Besides the numbers 1 to 36, there are also the 0 and the double zeros for the American roulette. Okay, so in the European roulette, the house has that 1.4 extra edge against the player, and slightly more for the American one. These are mathematically proven statistics that in the long run, if you were to play roulette, betting either even or odd, you will lose money. Okay, period. It's stacked against you. You may have a few winning streaks here and there. Again, over 1,000 spins, let's say, which is a good sample size. The house has that extra edge against you. Okay, and it's unlikely that you'd be able to make money in the long run. Okay, so here's what we're trying to do as traders, guys: find an edge that has a proven probability of more than 50%. Okay, if it's 50-50, then you might as well flip a coin, right? Heads, you go long; tails, you go short. So remember, if you have an edge of the likelihood of something that's more likely to happen than not more than 50% of the time, that's a proven edge. All right? And after that, if you can ensure that your winners are bigger than your losers, that's going to be even better. Okay? So you'll win, you'll be right more than 50% of the time, and each time you win, your winners are going to be bigger than your losers. Okay? What more can you ask for? Okay, if this were a casino you can play in, You just keep playing there because you know the odds are in your favor. Now, I wanted to share this with you guys. This is found on Baby Pips. This is the URL you can see. Okay, it recorded, um, I don't know which year or which month, but basically what it did is it found an average of the average pip movement of the major currency pairs during each Forex trading session. Okay, Tokyo, London, New York. And as you can see here, in every pair on this sheet here, London is the clear winner. So what does this tell you? There is relatively more movement in the London session compared to the New York and Tokyo. Now that's an edge, guys. So if you want to capture those big moves, you know that if you're an intraday trader, you want to be trading in the London session, if possible, of course. If it's not, I guess it leaves you with the New York or Tokyo, and you have to change your strategy slightly. But what I'm trying to tell you is the London has been proven to move the most. Now that's an edge, guys. So if you're trying to capture a day's move as an intraday trader, I think it's really best to just trade the London session. So here's the trading formula. Now we know when to trade, which is the London. We just have to find the right setup for it. And we have to make sure that the winners are bigger than the losers. Okay, do this consistently and you're on your way to becoming a successful trader. Let's talk about the setup for a while here. What kind of setup would you be looking for in the London session? For me personally, I love trading breakouts. I've been trading intraday for the most part, and all I do is wait for that range to happen and anticipate the breakout. So guys, remember that price cannot trend or range forever. Now, I'm going to share with you a very simple strategy here. If you're going to test it, uh, please do it on a demo account, okay? I'm going to be really honest. I don't know what the statistics are, okay? But it's worked for me very well. And usually I trade off the M15, okay? So intraday, you see price trending for a while and it formed a range here, right? Now, before you take the breakout to the upside or the downside, okay? I want you guys to wait for the fake out. Okay, what it is essentially is a move that looks like a breakout, except it moved back into the range immediately afterwards. So, what is the idea behind the fake out? Okay, if you're the big boys trying to push prices higher, okay, you need people who are willing to sell to you, okay, because you want to be buying from them. Does that make sense? And how do you get people to sell to you? You make them think that prices are going to go lower. It's really as simple as that. The moment these retail traders jump in for sell, the big boys are like, yay, that's where I'm getting back in. Okay? And that's all there is to it, guys. It's an exchange between buyers and sellers. And what you need to do as traders is to be able to identify whether the bulls or the bears are in control and just follow along. So, with this strategy, I don't really recommend you guys getting in on the buy over here. It's harder, trust me, You get better risk to reward, but it's just really way harder. Okay. What I'd recommend you doing is having a buy stop order here. Simply trading this easy, strong momentum and capturing a lot of pips in as little time. All right. The risk reward that you need to aim for is just slightly over 1 to 1. Okay. 1.5 is good. 1.2 is better. Sorry, 1 to 2 is better. That's the formula I'm leaving you with today. We have the London session. We have the fake out setup, fake out trade, and you want to make sure that your winners are bigger than your losers. Okay, without further ado, let's jump in to look at some charts. Okay, so I have chart of the Euro JPY. Okay, and what I've marked here is the period of the Asian session. It could vary from your charts a bit by a few bars here and there because of the time zone. Your broker's feed is different than mine. But this is pretty much a box for the Asian session. Okay, guys, this is the M15, and each vertical dotted line represents a period of 24 hours. Okay, so usually, since I live in Asia, um, I wake up in the Asian session, right? Somewhere around here. And this would be my London in the middle, and then the New York at the end. Now, there's going to be some overlaps in between Asian and London as well as London and New York. Okay, but you get the idea. When I wake up, I don't usually immediately look for a setup to happen. It usually happens in the London session, which is about the afternoon of my time zone. Okay, so let's take a look at this classic setup here. Okay, the Asian session is well known for its range. There's a whole strategy which is based off the Asian breakout range. Okay, sometimes I just trade the breakouts. Sometimes I look for the fakeouts. And what I've shown you earlier is slightly a modified version of it, which is to look for the fake out first and trade the opposite way of the fake out. Okay, and as you can see here, imagine you're looking at this day. It's an uptrend, falls into a range. Now again, you could draw your range like this or like this. I'm a discretionary trader, okay? I don't have strict rules on how you draw your ranges, just as long as price touches it the most, then that's the most valid line. It's an area after all. Okay, but this is an example of a fake out setup. A lot of traders, when they see these bearish candles, they have the urge to sell the breakout of the lows here. Okay, and as you can see, the moment price breaks below this horizontal line, it immediately went the opposite way. Okay, and if you were to place a buy stop order, you made some pips on the way up. Okay, so range, fake out, take the opposite. Okay, this is not a perfect textbook example. It would be if the fake out is slightly more to the downside. Okay, let's try to look for one like that. And again, these don't happen every day, guys. Asian session. Okay, and this likely happened in the overlap between London and New York. So this is a long range. Okay, throughout the London, this is probably about time when the New York opened. The fake out happened over here, right? People would think that prices are going down, making lower lows, and the opposite happened. Okay, and in this case, the buy stop would be on the top horizontal line. Okay, guys, you get the idea of what it means to trade with an edge. Now, there are countless edges in the markets, okay? This is just one of my favorite ones, I guess, because I only look at price action. And I found this setup to be very reliable. And most importantly, I use this myself to trade. Okay, thanks guys for watching the video all the way. Hope that you found something useful as usual. Uh, Please leave me a comment if you agree or disagree. And if you'd like to share an edge with me and the community, I would highly appreciate that. Just leave it in the comment below. And if you like the video, don't forget to give it a thumbs up and subscribe to my channel. Best of luck in your trading as always. Goodbye for now.
Yeah.